we renegotiated the contract to the same purchase price, same type of terms. However, we did seller financing. And so the seller is the bank. They're carrying the note. I gave them a down payment, and then I put the construction into an escrow account so I can still access that. Allowed me a lesser of a down payment in the end. And so I can still access that, and the seller can access it by default.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it.
Are you ready to start investing in real estate today but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with HomeInvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars. to claim your free course today. Hey, welcome back to another Hump Day Hustle. I'm your host, Todd Dexheimer, and with me, as always, is John Stiles with Bridge Realty. John, how are you doing today?
I'm doing great today, Todd. It's a good day to be alive. How about yourself?
I'm doing fantastic. Excited because I've been talking about this deal for, I don't know, feels like 2 years, but it's been a while. And finally got it closed. So we'll talk a little bit about that today. I'm focused and, working on getting that kind of whole project started and making sure we're doing our best at creating the value that we anticipate creating, as well as, I still have another property that I'm doing the same thing to, that value add. So working on continue with that one and trying to work on hopefully getting the next deal done here before the end of the year. Ideally like to close on at least one, if not two more properties, but focus right now is at one at a time. So just trying to do that. I've got 3 offers, 2 offers that I've already put in and one more that I'm putting in this week on some different projects. So we'll see how they go. We'll see. You never know.
Yep.
A lot of competition right now, as anybody who's active in the multifamily or even single family space knows. Just a ton of competition, or commercial space, shoot, anything real estate. Tons of activity, tons of action going on. So it's crowded space, and you got to be careful, obviously, not to overpay when things like this happen. I just was on Bigger Pockets the other day. It might have been this morning actually. And one person was talking about this turnkey property they were buying. And the turnkey property he was buying for right around $265, and it appraised for $220-ish. And, he was talking about getting a discount and maybe splitting some of that with the seller. And I'm going, that seems odd. And as I kind of read through the post, then he mentioned that he really likes this deal because he sees the opportunity for appreciation. It's going to be negative cash flow. but there's a chance for appreciation. It got me thinking, that's how people get themselves in trouble. That's how people got themselves in trouble before, and during the last crash, is they start going, it might not cash flow, but I've got money coming into my bank account for my job. I don't need the cash flow. I just want that appreciation. Well, this guy's buying it over market value. So there is, the market has to catch up to him, first of all. So there is no appreciation that he's going to realize, at least for a while. And if the market doesn't continue to appreciate, well, then guess what? What your whole investment was based on is not happening. And anybody who's in real estate has been in a long time understands that real estate doesn't appreciate very rapidly. You create that appreciation. So over the life of a piece of real estate, let's call it 50 years or more, you're going to go up at or slightly above or slightly below the
rest of the market.
The rest of the market. I mean, whatever whatever our dollar is accelerating at, that's where you're going to go. And so I can't think of the damn word for it.
Inflation.
There you go. Gee, I'm brain dead here. But yeah, I mean, real estate goes up at or near inflation. And the only way to beat inflation is to be able to create some sort of value through, an equity play of, value add or buying at the bottom of the market or something like that. But overall, it's not a great appreciating asset. So just to base it just on that, especially at this point in time in the market, to me is a dangerous play. So people got to look out for stuff like that.
Yeah. Well, let's take some time and go a little bit more in depth, if that's okay, into this recent closing you had. Yep. So one of the first questions I have is what made your offer stand out to this seller so that he took you seriously? And I'm not sure if there was competition in this situation, but what made it stand out either from other offers that were out there or just in general so that he was willing to respond to you?
Yeah, well, first of all, it was I'd say the biggest thing was the broker I was dealing with is a very reputable broker in town. He's the broker that sold him the property and one of the most reputable brokers in town. So when the broker brings somebody to the table, most sellers are going to take them pretty seriously. So I think that was number one. Number two is it wasn't listed at all. So it was a completely off market property. It wasn't being shopped. It wasn't on an email list, nothing like that. So there was literally really no competition other than I'm sure a few other people knew about it or, but there was virtually no other competition. So those are the two biggest things is just overall having the right team as far as the brokers in place and then not being on the market was really valuable. Beyond that, if it's a listed property, I'm going to put together more of a package presentation on who I am and why we should qualify for the property. But we didn't really do a big package like that on this property just because it was off market, a quiet sale. And so
okay.
Didn't feel we needed to. And the seller didn't ask for it either.
And then what about this specific property, made you want to place an offer on it?
Yeah, sure. A couple things. It was in one of the markets that I'm, active and want to be in. So that was definitely helpful. I mean, obviously having a footprint or have a lot of knowledge of the market's definitely helpful. Two is it was a good value add opportunity. The property was distressed. However, it had some work already done to it. About half the units have been renovated, and the seller just, I would call it more burned out. We'll probably explain a little bit more about what happened, but there's just a lot of value to be added, a lot of good things that I could feel like I could create with the property and profit to make and just make it an overall better community for their residents as well. So
nice. So, and then, how did it play out once we know that it's been a long time from the time you made a purchase to the time you close.
Yeah.
What are some of the details of what was the reasoning behind the extended time frame, and how did it all go?
Yeah, sure. So I should have looked up the days before we started this, but I can't remember exactly when we started negotiating and got our original offer accepted. But I believe it was like March or April. And so from there, the offer was accepted. We began actually negotiating quite a bit. We negotiated for probably at least a month, back and forth. And he was, the sellers, they were just stuck on their price, and we were quite a ways off. I didn't think it was going to happen. But eventually we were able to get them down to where we needed to be, and us to go up to where it worked. So eventually we did get that together. We put it under contract, did our due diligence. Everything turned out pretty well through the due diligence. Really no major surprises. It was essentially what we thought it was going to be. Value add, needing a good chunk of money to do the units. And we kind of figured, the units that needed to be done, we'd be putting, anywhere between 10 to 15 grand into the units that still need to be done. And that's about where we landed. So, so that wasn't a big surprise. The due diligence went well. Everything checked out. Environmental studies, surveys, all that kind of stuff came back nicely. But the biggest problem was the financing. And for this deal to work for me, what I wanted and needed, I needed to get either local bank financing, or I needed to get a bridge loan. And bridge loans are really expensive. If you've ever dealt with the bridge loan, anybody that's listening, you're going to pay, I don't know, you're going to pay right now between like 6.5% and 9% for this size property, for what this property was, and the condition and the overall occupancy. I would have, the quotes I was getting were right around that 8 to 9%. And then you're going to pay a lot of closing costs, tons of closing costs. They've got fees and fees and fees and fees, and then even more fees. So my closing costs would have been around 200 grand to close on the deal, potentially even more than that, potentially closer to 250. So bridge loan just wasn't a great option. Plus, I don't like dealing with bridge lenders if I don't have to. The one I'm dealing with, there'll be lots of stories to tell, but I'm not going to tell them right now. But basically, they tell you things that aren't true, and then after they got you, they decide to, change their story basically. So I was hoping not to go bridge loan. I was hoping to go local bank, but here's the problem with the local bank, because I'm not local to this property. I'm syndicating it, and it's got distress. It's not 90% plus occupied. So anytime a property is not 90% plus occupied, it adds a whole nother kind of difficulty. Local banks, if you're not local, that adds more difficulty. And then again, if you're syndicating, that adds more difficulty. Now, I had some banks that said, yeah, they would do it. They just wanted everybody that's part of the partnership to sign in the personal guarantee. Well, that's not going to work. I'm not going to have somebody that has 5% interest in the property sign a personal guarantee. It's just not going to happen. So I did have a couple banks that I think maybe would have done it, but I was coming on that timeline of my earnest money, which was $60,000, was going to become hard. And so I needed to make a decision. Was I going to let my earnest money become hard and potentially have to walk away from the deal after that happened? Or was I going to try to make some changes to the contract? And so that's what I did. I tried to make some changes to the contract. Ultimately, we ended up doing that. We renegotiated the contract to the same purchase price, same type of terms. However, we did seller financing. And so the seller is the bank. They're carrying the note. I gave them a down payment, and then I put the construction into an escrow account so I can still access that. Allowed me a lesser of a down payment in the end. And so I can still access that, and the seller can access if I default. So long story, but that's kind of where we were.
Well, that makes a lot of sense. And so I don't know how much you can share, but so how much was the total down payment that you had to come up with?
Yeah. So down payment, the down payment was 8% of the acquisition. I'm not going to give a ton of number details out, but so the down payment was 8% of the total acquisition. And then the construction funds brought the whole down payment off the acquisition to be about 20%. So we still did bring, just over, it was like 22%. We did bring 20%. However, on a traditional deal, like let's say we were going to get Fannie Mae, Freddie Mac, small balance type financing, traditionally what you would do is you'd bring 25% of the equity, plus you would do the construction out of your own pocket. A bridge loan, then they would allow you to lump it in. So I kind of structured it as a construction type financing, a bridge type loan. However, with my own terms, with way, way better rates and everything. My closing expenses ended up being, all my closing expenses combined. I'm talking paying for my securities attorney, paying for my attorney, paying for the survey and all that kind of stuff. That ended up being under $65,000. What a bridge lender would have charged me, it would have ended up being probably, like I said, at least $200,000. If I just take those types of fees that a bridge lender would have charged me versus my fees, I'm looking at about $35,000 that I spent versus $200,000. So I saved a big lump of money in that. That was a huge benefit. The other thing that a bridge lender charges is usually a disposition fee, 1 to 2% disposition fee. When you go to refinance the property or sell the property, they're going to charge you 1 to 2% just to get out of it on the loan amount. So that's another thing I won't have to spend either. There's no prepayment penalties, which is beautiful.
Yeah.
And then the interest rate's great too.
So is there a certain time frame that the seller's willing to be in this deal with you?
Yep. Yeah, good question. So we set it up as so it's kind of a rolling type schedule. So all this was actually pretty much suggested by me. Very little was negotiated and changed by the seller. A little bit of it, but not much. So year number 1, we pay 5% interest only, for the first 12 months. Year number 2, for the next 12 months, we pay 6% interest only. And then year number 3 and beyond, we pay 8% interest. I shouldn't say and beyond. Year number 3, we pay 8% interest, but we have a 1% fee up front if we want to go into year 3. So it's a 2-year term with a 3rd year potential extension if we want to, which I really don't think we'll need. I actually don't think we'll get into year 2, at least into it very much if we do it all. So I think we'll get done. My optimistic goal is to have it done in 9 months. My kind of pessimistic outlook would be have it done in 18 months. And then the idea is to be able to refinance out of it and get like a Freddie Mac small balance loan out of it. Yeah. And
did you share those plans with the seller so that even though he has this potential 3-year loan, he understands your intention is to get out of it much sooner?
Yeah. He understands that and he's fine with it. He doesn't, he wants to get out of the property. His main motivation isn't to make a bunch of money on the interest, even though he'll make more money off the interest than he was on the cash flow of the building. His motivation is to be done with the building.
Mm-hmm.
So
nice.
So yeah, he's happy to get out of it whenever I can get out of it. And that's why there was no prepayment penalties. A lot of times if a seller's really just their main thing, like I have another building, his main thing was he really wanted to keep that cash flow, like the idea of the cash flow. So a sticking point for him was, well, you're showing me this cash flow. That's great. Looks great. But what happens if you sell? Then I don't get that anymore. And I'm allowing you to pay me, basically less for my property that I want. And so then in that case, we set up a prepayment penalty, and that allows him to then at least reassure that he's going to get some of his interest. And in case I do sell or refinance early, but in this case, this guy, he didn't care. He didn't, no prepayment penalties, no disposition fees, none of that.
Okay. Well, nice. I do have some other questions, but anything else on the financing piece of this?
No, not anything else. I think I probably should clarify the down payment and the construction escrow, just so people understand what it was. What I wanted for me was the lowest amount of down payment possible. However, I knew, and maybe I didn't. Maybe I should have even asked more. But one of the things is sellers want to see a decent sized down payment. They don't want to see you come in with no money typically. So one of the things that I looked at was, how can I give him a big down payment without giving him a big down payment? And that was the construction escrow account, is where, look, I want my capital liquid. I don't want to put $2 million, $3 million into a property. I'd rather put a lot less. So my thing was, I'm going to give you an 8% down payment. However, we're going to make that closer to that 20% down payment by putting the rest of the money into a construction escrow account. I can draw upon that escrow account. Now, escrow account is just over, it's over $500,000. So I can draw on that escrow account as I do construction, so to pay contractors. So we have an improved property. If I default, the seller, the old owner, gets the property back, plus any money left in that construction escrow account, plus my down payment, plus any improvements that we've made on the property. So even if we've burnt through half of that construction account, well, we've gotten half the construction done. If we get foreclosed on, he gets the improvements, the remaining budget, and his original down payment all back. So it was just kind of a safety net for him, yet it allowed us to be flexible and to bring less money out of our pocket. Not having to bring all that construction up front is really helpful.
So what's the draw process in order to get funds? Does the seller have to sign off that work is done, or?
Yeah, so seller gets to sign off that work is done. There's, obviously stipulations that he can't withhold and all that kind of stuff. So he can't just not sign off on stuff as it's done. We've got a construction schedule, and if the work is done and completed, if there's any disputes, there's third party involvement and all that kind of stuff. The escrow money is being held by my attorney, so that's nice. So there's some control in that on our part. Obviously the attorney is going to do things, above board, but still, it's nice knowing who is holding that money. So yeah, he approves it, and we take the draw, and so that way he's got a little bit of control, but yet not over control, because like I said, if there's disputes, there's third party inspectors that can get involved and make sure it's all being done, and then everybody gets their money.
Yeah. Sounds like that was well thought out.
Yeah, well, part of the thoughtfulness, if you want to call it that, is the seller is an attorney, and so that was another, I guess, a holdback of this whole deal, is that the seller's an attorney. So, he wanted his contract to be very, very favorable to him, and of course, we wanted to be favorable to us, and so we had to go back and forth a lot on the verbiage of the whole contract. So yeah. Very nice having a good attorney. I think the attorney that I have, that I used, he's an in-state attorney where that property is located, and he I think does a really, really good job of looking out for his clients. And so nice to have somebody like that on your team that is very knowledgeable and honestly doesn't like put up with stuff. So
Nice.
hey, I want to interrupt this episode real quick to talk to you about Nate Armstrong, our sponsor, Nate Armstrong. He's with homeinvest.com, and you want to get to know Nate. So go to homeinvest.com and just connect with Nate, talk to him, learn about his operation, what he's got going on. He's a turnkey provider, and it may not be right for you, but it could be the perfect fit. So it doesn't hurt. It's a free call, consultation just to figure out, what they do, what they have to offer. And worst case is you're going to meet a great person who's really well educated in real estate. He's done a ton of different real estate strategies and probably is going to teach you a little bit, even on a short conversation with him. So go to homeinvest.com and connect with Nate's company. You're definitely not going to be disappointed. It's worth it. So thanks. And we'll get back to our show.
So let's talk a little bit more about the issues with the property and why, it was difficult to get financing on it. What's the vacancy factor? What are the conditions? Can you go into more detail about that?
Yeah, so there's a vacancy rate of just over 20%, 22% to be exact, and economic vacancy or economic occupancy is just slightly under that. So there's very, the cash flow is little. It is cash flowing, but it's not great. After you put, full mortgage on there, you're basically break even. So that's definitely a challenge. If a bank sees that and they go, geez, you're going to be breaking even on this asset until you get it stabilized. Well, how long is it going to take you to get stabilized? Do we really want to finance that? Now, in our case, I raised money for this. And so we actually did raise an additional amount of funds to be able to cover any vacancy. So right now we've got up to $185,000 to be able to cover poor cash flow, which, hopefully we don't use nearly that amount. We shouldn't. We shouldn't even use close, but we raised it as a safety net, along with some additional funds as well for construction too. So we have a pretty good safety net that we raised for some, essentially rainy days. The other challenge was the construction that was needed on it. So like I said, about half of it was remodeled already. It's in good condition, looks nice. Remodel is actually kind of the standard that I like to see. However, the other half really hadn't been touched in the property. So there's a lot of challenges there too. Like I said, each unit we're looking at between $10,000 to $15,000. The bad units are 15. Some of the better units are less. Even there's a few units that'll be $3,000 to $4,000, but the majority of the units are, let's call it $12,000 on average in renovation. So that's a pretty heavy lift per unit. Now, when you take per unit for the entire complex, it's not that, because again, about half of them have been already done, but still, it's a good heavy lift, and lenders see that as well and see the challenges with that too. So I would say those are the two major challenges as far as the property goes, and lenders wanting to get on board. I think the main reasons why it was very tough to get the bank financing was because there was the three daggers that got me. It was the occupancy and the property condition. That was one dagger. The other dagger, which is probably the biggest dagger, is that I'm out of state. And then the third dagger, which was another pretty decent sized one, was that I'm doing a syndication. And a lot of these local banks, they just can't wrap their hands around what that means and what that really is. They think that the person who's buying it should be putting 100% of their own money into the deal. So So that's the challenge with the local banks, is that's kind of how they think. They think very, I don't know, very small, I guess. They think small. They're small banks. But it's true, though. I mean, they don't have as much risk that they can take. And to them, that's a little more risk.
Sure. Yeah. So now what's going to be different? How are you going to be different than the previous owner as far as, we'll start with getting the renovations done?
Yeah. Yeah. Well, first, I'm awesome, right? So that helps. No. Yeah. So the biggest thing is the old owner, a couple things, they undercapitalized by what it sounds like by quite a bit. So they essentially already spent the money that they earmarked for the property. So they undercapitalized. And then the other thing is they just weren't getting the construction done very fast. I mean, it was, it's 120 units and they're about halfway done, and they're 3.5, almost 4 years into it. You know, that's way too long to do. That's way too long to do 300 units. So they just weren't getting it done quickly. They were using on-site maintenance to do a lot of the major renovation. So they weren't using general contractors to get the renovation done. So that definitely hurts. I mean, when you can get general contractors in there, you can have 15 to 20 guys on your property, or guys and gals on your property working on it, getting it done. You're going to get it done a lot quicker. When you only have 2 people on it, one to two people, it's just going to take forever. And that's kind of how it was. I mean, it was going to take another 3 to 4 years to get the rest of it done. So yeah, we'll just have a lot more people on it. We'll have professional companies that's what they specialize in. We've already got, them scheduled to start next week. So we'll be starting construction as early as next week. The thing that's nice, and I guess this doesn't have anything to do with the previous owner, but one of the things that's nice is that 20+% vacancy. Yeah, it hurts our bottom line, but it's nice because we don't have to remove any tenants. We can get right to work on those units. So immediately we've got all those units to work on and be able to get back online as quickly as possible. Once those are back online, we'll be able to get our occupancy up really quickly. And I'm very optimistic about that. I've been we kept the on-site manager. Really liked her, thought she was doing a really good job. She's been there for nearly a year, but her hands have kind of been tied on being able to do much because there was only so much in the budget to do anything with. But she is really optimistic about leasing, which I like. According to her, anytime one of the renovated units become available, she can rent it out in days. While I was there, one of the days, there was about 6 people that walked in to try to see if there was any place to rent. So she gets lots of walk-ins, very little advertising right now. And so with a little bit of advertising, with a change of community, with the positive things we're going to do, I think it'll be definitely a major benefits to that property and be able to lease out pretty quickly. So that should help the occupancy a lot. I mean, the units that are vacant right now are in very poor condition.
So has that been the main issue with causing the vacancy, just the lack of renovated units, or is there other issues that are causing vacancy?
Well, I would say that's probably the major thing, right? The biggest thing right now is the lack of renovated units causing the vacancy. The other thing is there's very little advertising. There's very little community. There's no really online reviews. There's just not a lot of things that we're promoting that property at all. The current manager, I don't know, because we changed management, but the current manager, and maybe he's a great guy, maybe he's great management, but their experience in the multifamily is almost none. And so I think that definitely plays a factor into it as well. They do a lot of retail and commercial managing and leasing, and they don't do really multifamily this was one of their first properties trying to get into that type of space. So I don't think
that,
that was really
that
helpful.
that can be a totally different ball game if
Yep.
you're dealing with commercial businesses versus
Yep.
individual people, tenants.
Yeah, and I don't want to slam the guy because I hadn't really had any conversations with them. I'm using a management company that I know can do a very good job and is very capable and I'm very comfortable with. So that's who I'm using. I did not interview the current third-party property management company. So again, I don't want to slam them. Maybe they can do a really good job. They might be able to, but they're just not the company that I chose.
So getting back to the renovations, aside from the in-unit improvements, are you doing anything to the common areas or adding any amenities?
Yeah, not too much. The exterior is actually in pretty decent condition. We're doing a lot of tree removal and landscaping. We've got just some other minor building details we have to do, some soffit fascia repair, some other little minor stuff. But other than just kind of cleaning up the grounds and making it a little bit nicer, the exterior overall is in pretty good condition. It looks very presentable from the outside. We're doing some security things to it, and likely we're going to be changing out the front doors. The front doors right now are not really welcoming. They're just a big metal slab door. And so that's not very welcoming. So we're going to do, full glass doors so you can actually see who's entering and exiting the building to make it a little more comfortable for the tenants and for the tenants' guests and for the maintenance and management too. And then other than that, we're just going to try to create a lot more community to the property and, doing that. One of the great amenities of that property, it's right next to a big city park already. So we do have a great amenity that we don't, we kind of pay for through our taxes, but we don't directly pay for.
Yeah.
So,
cool.
Yeah. Yeah. Excited for the whole project. I think it's going to be really good. I'm really optimistic. I think the tenants are going to hopefully be very appreciative of what we do. And, they obviously that's a big part of your success is keeping the tenants happy and making them happy. And I think there's been a lot of years where they've seen changes, not saying the old owner wasn't making changes. They're just slower than I think a lot of the tenants would like to see. And I think they're going to see changes quickly with us. Which will, be definitely a good thing, and excited to create a community there that people will be excited to, be a part of, and just clean, quiet, affordable housing for our tenants.
Nice. My next question, I'm not sure if we really have time to go over it in this episode, but, with all the different moving pieces that you have between the property manager and the leasing and the contractors and the renovation, and keeping track of your investors and keeping them informed, do you have some sort of back-end system that's helping you keep organized and see, what's going to come up next week, or what do you have to remember to do tomorrow or next month? How are you keeping it all organized, or is it all up in the head and you just figure it out? Or
Yeah, yes, a lot of it is up in the head, but no, we put everything goes, on quote unquote paper. I mean, everything's written down, everything's in our computer. I actually would like to. So if anybody out there that has any suggestions, I'd actually like to get a system that's more integrated as one system, because we're using Excel and we're using QuickBooks and we're AppFolio, and we're using what's that thing called? Starts with an S. I can't remember the name of it, but we're using another system that but they none of them integrate really well with each other. So they're all kind of their own independent moving parts that you have to that you have to kind of check in on. So I'd really like to have one system that works and talks really well with each other, and just, the property management can be on, and my assistants can be on. We can all communicate through that one kind of channel and system and make sure things are flowing smoothly. Because as you get more moving parts, it becomes more challenging.
Right.
Same thing with the investors. If the investors can have their own kind of portal link where they can just go on, and it'd be nice to be able to set it up to where nothing's going to be completely automatic and automated. I get that, but it'd be nice to have the same system where investors can just log in. They can kind of see what's going on with the property, and we can log in, and our data shows what we need to see, and third party, same thing. So everybody can kind of see the same data, but only data that they really need. So if the property manager is not going to need to see what my investors are making their return on investment on. They don't care about that. And same thing with my investors. They don't need to know some of the details that property management company needs to know. But if it could all be on that same system, it would help a lot. So anybody out there that's got that, let me know.
Yeah. Comment below.
Comment below. Yeah. Let us know.
Very good.
Technology can be definitely a huge, time and money saver. And if you can integrate it properly, for sure, I'm all for it.
Yeah, well, great. Appreciate you going through the summary of your recent transaction. It'll be great to see the updates as that goes along. So,
yeah, one of the most fun parts, John, is that I closed on Wednesday last week, and it was Tuesday. I was going to do a walkthrough, and I was going to walk through with some contractors and myself and my manager, and gonna meet with the on-site, and that was all scheduled to be on Tuesday, and the seller just wasn't having any part of it. Didn't want me to touch the property. Nope, you're not going on the property till you close. I'm going, well, I'm not going to close if I can't go on the property, right? Because especially now, as he's like continuing to say that, I'm like, okay, what is this guy hiding? Like, did one of the buildings blow up, or like what happened? So he wouldn't let me on. Not going to let you on. Not going to let you on. So finally, we had to have a conference call, and my attorney and him got into it pretty good. And my attorney basically said, look, you're breaching your contract, because in the contract it says that I have the opportunity to inspect the property prior to closing. And he wasn't going to let me do that. And so after my attorney and him had their little shouting match, he finally said, okay, you can go onto the property. And so I finally went on the property. I found out that day that the on-site had really no clue we're even part of a transaction anymore. They knew, months ago when we did the due diligence that potentially we were buying it. But after that, they were told nothing was happening. The third-party property manager, they had no clue either. They found out the day of closing that they're no longer the property management company, and this lady, she's thinking she's going to get fired. And, she was very happy, I think, to find out that I had all the full intentions of hiring her. Then I find out that the maintenance crew, there was no maintenance crew, and the new maintenance guy, his first day was going to be Wednesday, the day of closing. So he hadn't even been on the property yet to start work. So on Wednesday, when I got to the property, I had to introduce myself as the new owner and tell him he's still hired. We need to run your background check, get all your information, but you're still hired. Consider that. Basically I had to tell the employees that, look, you guys are hired until you prove yourself otherwise. So it was a very interesting experience. Like I said, the guy wouldn't let us on the property. I don't really to this day still understand why. I think he was nervous that I wasn't going to close. And if if I didn't close, that his management company would somehow like flee the area and not manage his property anymore. I don't know. I'm at a loss of what it was, but
Yeah.
Yeah,
I don't,
he didn't want us to touch foot on that property, so it's pretty interesting. So up until the day of, like, up until I wired the money and signed the documents, I did not know if I was going to actually close on this deal.
that's part of what makes real estate so exciting, right?
Yeah, add a little excitement to otherwise a dull transaction. So that was fun.
Very good. Well, did you do anything to celebrate? You go out to dinner or?
Nope. Let's see. What did I do to celebrate? I closed on the property. Then I looked at 2 other apartment complexes right after to buy. Then I flew home, and now I've written a few offers. That's what I did to celebrate. So
Just roll it into the next one.
there's no celebration until, I don't know. There's just no celebration.
Well, you're getting to live the life that you're designing to live, right?
Yeah, exactly. That's the celebration right there. And
Very good.
the celebration, and actually the real celebration, is when these properties truly come into what we're supposed to, do, what our business plan says we're going to do. And you're sending investors check. That's the real celebration to me. That means it all worked. That means the plan, the execution happened, and then we're excited. So
Very good.
well, cool, man. Yeah, I think that's it. How can people reach us, John?
Yeah. Just, you have to know the name, Pillars of Wealth Creation. And whichever platform you're listening on or watching on, just go ahead and hit the subscribe button, hit the like button, and we'd love if you be in touch with us and give us some feedback. We have an open-ended question here about the ideal software to keep everybody in the loop. So there's that. And yeah, just let us know what other questions you have and what other value we can add to your wealth creation process. So
Awesome. Absolutely. Well, cool, John. I appreciate you being on, and we will talk to you next week. Make every day Saturday, man.
you too.
Are you ready to start investing in real estate today, but don't know where to start? Sometimes investing can seem way too complicated, but it actually couldn't be any easier than with homeinvest.com. You know the co-founder and my friend Nate Armstrong. He appeared on episode 20, and if you haven't heard it, go back and listen to it, episode number 20. Home Invest is a company that allows you to invest in turnkey real estate. Their goal is to build powerful investment tools that make real estate investing accessible to everyone. They have contractors and property managers available for you with the click of your mouse. While other real estate agents can only offer a property, Home Invest brings you a full turnkey package that allows you to diversify your investments, earn passive income, and start building equity in properties. Their simple, intuitive design allows newcomers and experienced investors alike to hit the ground running and to be able to choose the properties when they want and where they want. View easy to understand charts and data to allow you to buy in only a few clicks or just a simple phone call. With Home Invest, you'll be building your portfolio as quickly or as slowly as you would like. And right now, Home Invest is giving our listeners, Pillar of Wealth Creation listeners, a free course on how to finally win in real estate investing. So go to homeinvest.com/pillars. That's homeinvest.com/pillars to claim your free course today.